Hey guys, Devin Fahrner up here in Boise, Idaho with APM Mortgage. I've been asked to answer a couple questions. I have a somewhat unique style, so these answers may not work well for everybody, but they work well for me, and I hope you're able to pull something out of them. So one of the questions that I find that I think a lot of us are getting asked right now is, should I do a buy down on the rate, either permanent or temporary? If I have a customer that is eventually going to be selling a home or cashing in some retirement, coming into some money, that they may not have this loan for a long period of time, I think it's really important to do those break-even calculations and make sure that we're not asking them to do a buy down, especially if it's their own money, if they're not going to be in the loan for a long period of time. And when we're discussing break even, also make sure that they realize that we do believe there will be a refi opportunity. While we're going to be careful not to make any promises about exactly when it's going to be, if we feel that it's going to be in the first couple years, and I'm suggesting a buy down that might take 3, 4, or 5 years to happen, I probably want to be really careful to make sure that if I'm answering that for them, I'm letting them know that it would take X amount of time before they're going to break even for doing this buy down. Another important question to ask is, who's paying for the buy down? If it's already built into an incentive that's being offered, and maybe, for instance, in our area with new construction, the builder isn't willing to reduce the price instead of giving the concession, we might need to use that buy down, whether or not we would have done the same action if it was their money. It's a little bit easier to spend a seller or a builder's money when it's already pre-built in concession. And then the most important thing is finding out what payment is comfortable for them. For instance, my debt to income ratio may tell me that the buyer can afford a higher payment, and that may be, in my opinion, the smartest thing for them. However, if they can't sleep at night with that payment, after having this educated conversation where we talk about all the pros and cons of a buy down, we might suggest to them that, hey, you still ultimately need to pick the payment that is best for you. Bottom line, you listen to the customer's very specific needs for their scenario and give them an educated answer on the situation that applies best for them. What do I say to the people that think the market's going to crash? This is a tough one, and the reason why it's tough is I don't know that this is ever going to go away. As many of us know, right now we have the biggest number is just supply and demand, inventory, right? So there's always somebody that can invent this crazy scenario where there's going to be a bubble, but if you oftentimes explain to them that we're basically at 25% of the inventory that we had present before the last meltdown, we're going to approach inventory and we're going to talk about the fact that there's just not a lot of places on the market. So we don't have this oversupply. So regardless of the fact that interest rates have gone up, which have obviously affected the market, we don't have this overabundance of inventory. We've also seen rents go up. So we're not in a scenario where it's like, hey, I'm going to ditch my property and go rent for much cheaper, because right now a lot of the existing mortgage payments are as cheap as rents have climbed up in the meantime. And then just kind of break it down and attempt to put some logic into this so they understand where the facts are coming from. I will tell you, in my experience, you are going to run into people that, regardless of all the common sense and Barry Habib and the good facts that we feed them, they are going to just believe that there's this impending doom out there. So you just answer it carefully, give them smart feedback, don't get over opinionated, and do your best to create that level of trust that hopefully that they will recognize you for being a trusted professional and take your lead. So one of the things I love about APM is all the access to the different tech tools, and I was asked to pick the one that's made the biggest difference. And that's tough for me because I actually usually embrace almost everything that comes out and at least give it a try. And I love BombBomb. And I sometimes honestly feel like I'm on a quest. So we can talk about the simple things, right? Like, I'm going to deliver a loan estimate, or I'm going to walk you through questions that you might have. And I'm going to do that in a BombBomb video. Here's what I've learned. Getting on the phone with talking to people these days is difficult. BombBomb's amazing. Doing it embedded. I do all my reverse mortgage proposals with a BombBomb video. And what I tell them in the beginning is, hey, we're not in a spot where we can talk yet, but I want to walk you through 4 or 5 really important pages and follow along with me. And I can go through those. I can point with my mouse. I can narrate through the video. I can show emotion. And I get overwhelming response from people saying, thank you so much for making that video for me. So get comfortable with it and find ways to think, if you were the consumer, how would you want to be informed? And especially if you're dealing with a consumer in these days that is a big text savvy person that is not very good at picking up the phone, overuse BombBomb with them. Keep them informed. Hey, your loan's approved, your loan's funded. They will leave this transaction saying, I felt informed and empowered all the way through. So lots of good stuff out there. Bomb's the number one for me. So thanks for listening today. I want to make sure that you know if you have any questions, don't ever hesitate to reach out to me personally. And I hope you've been able to find a little nugget here today.